Hello, everyone, and welcome into a special edition of Trade Risk Live. Today, I am joined by Mr. Rotation Report himself, aka Aaron Jackson. Aaron, how are we doing today?
Doing good, man. How are you?
I am good. I have had a busy day of contractors around the house doing some fun home ownership. Buy a home, they said. You'll never regret it. Well, I'm in the early stages of regretting, but here we are. So basically, Aaron and I, we check in with each other every so often. Every time we pretty much end the call, we're really like, we should record something, or we should record this conversation, or we should, do something with all this, charts that we
For
share.
9 years we've been doing that.
9 years. Yeah. So finally, new year, January 30th, 2024, we figured why not hit the record button, share some charts, talk about what's going on, and here we are. So we're just going to bat around some ideas. Everything here is pretty much unscripted live. We just kind of threw some things in a doc here, and we're going to pass the baton back and forth. If you're watching this after, we are recording after the close on Tuesday, January 30th, 2024. So I'm going to kick things off. I'm going to just kind of lead us down to where we are right now. It's only been, I kind of hate using year-to-date charts, but it's, basically a month worth of trading we've had now. And this is kind of the lineup here of the action and where we are a month into this new year. So basically, we've got kind of the same story continuing here. We've got large cap technology, NASDAQ 100, up almost 4%, followed closely by the S&P, the Dow Jones, the Russell is in the red. The only thing in the red right now this year, big divergence still going on. Small caps haven't yet caught up to everything that's happening in fund mega cap land. In terms of commodities, oil, the dollar, right? Here's the dollar. And this is where I think we should start off. And the dollar, rates, yields, all of this goes hand in hand. King dollar is back in action this year, right? It's up 2.5%, the dollar index, and yields have been ripping higher. Maybe they're stalling out now. We got oil that's up strong. So I'm going to pass it to you here. I want you to talk about kind of your thoughts on interest rates. I can let you share your chart here. Let me throw it up now.
All right. As you can see, the rates, I think the rates are everything right now. We saw last fall, we had this big breakout in rates. We're all worried about, whatever, the return of the bond vigilantes and all that. And then, big move lower in rates. And then just recently, if you look at the top pane, you've got the 5-year, and then you've got the 10-year, and then on the bottom is the 30-year. And you notice the 30-year just retested the October 22 peak in rates, and now it's kind of pulling back off of that. So the question is, okay, are these rates going back down? I mean, that could just be a corrective rise in rates, and we could just have another real solid leg lower in the rates. Treasury bulls, they got a little something to work with.
Yeah, they do have something to work with. I mean, if I flip it here, I mean, we're looking at now the long bond, right? So we're looking at the inverse here. So we're looking at a bond fund, and we're looking at the TLT, which everybody loves to track here. And if you look at this kind of weekly setup right now, I mean, it's kind of looking pretty nice here. I mean, this looks pretty kind of classic. You got your nice impulse leg up here, right? From the bottom in November, right when equity markets started to rip, dollar rolls over, right? All that starts to happen. Yields roll over back in October, November timeframe. They peaked pretty much towards the end of the year, been pulling back for the month of Jan, and now they're starting to stabilize again. So it is kind of interesting here as reaching for some of that long bond, as you're going to get a weekly kind of breaking above the prior week. So it's an interesting trade, and you can look kind of off the piggyback here. I guess ARK isn't doing a whole lot. ARK W, I kind of look at those growthier, speculative type of growth names when I think about this trade. Any of these stocks look interesting to you right now? Like, are you looking at any of this?
Yeah, there's fatter pitches to be had for sure.
Okay.
For sure.
Okay, I like that.
it might be a counterintuitive time. It does kind of seem to be shaping out that way a little bit. But one more thing on the rates, I think what we're going to notice as we go through some of these charts, the 10-year, you can't really see it, but in some of these markets, even like your Coinbase, we've had these impulsive moves, like you mentioned, and then this recent last few weeks is these moves have been like classic corrective, like ABCs, like measuring perfectly, just like right out of your textbooks, like exactly what you'd want to see. So if you see something similar in some of these archetype stocks, like, I mean, that's a good hint. I think that's a good hint.
Yeah, no, that's well said. I think now maybe is a good time to take a quick peek at market breadth and kind of like we said, and rates and market breadth. I mean, this is something that I think everyone's certainly got an opinion on. We've been talking about breadth. It's been, 7 stocks, 10 stocks, 12 stocks leading the market higher. And, we're at this place now where end of January 2024, we're still having the same conversations. I've got these 3 charts here, which, again, there's so many ways to slice and dice market breadth, and we can look at some different views next time. But just, in a very short kind of picture here, there's something that's semi-interesting emerging here. And this is on the top chart, I've got S&P 500. In the middle, I've got the Russell 2000. And then on the bottom, I've got the NASDAQ 100. What I'm very simply looking at here is the percentage of stocks that are trending over their 200 period simple moving average, or the 200 simple moving average is trending up. And I mean, the only thing that I think is, again, mildly interesting here is when we look at the middle pane, we've got the Russell 2000, and we can see that, it's kind of, the only thing that's maybe not diverging a little bit negative here, where we have, say, the S&P 500 at new all-time highs. You're not really seeing trending, 200 SMA breadth. And again, there's so many different measures of breadth. So I don't want to say this is the end all be all one, right. But you're seeing, new all-time highs in the S&P 500. Breadth here is not really, that enthusiastic. Same thing with the NASDAQ 100 down below. You're seeing almost, I guess you could call it a negative divergence, right? And again, you look at the Russell 2000, and it looks like it's trying to show a little strength. Maybe it is the rotation point here, but it's been a lot of waiting, and it's been a lot of just mega cap dominance, and we'll see. I'm hoping for some small cap expansion, but I've been hoping for a while, and hope is obviously not a trade, and we're going to just continue to watch it. But rates, small cap, participation here, all kind of going hand in hand. Let's take some, more views here at some of the charts that you brought, because you said there are fatter pitches. I don't know if that's the time you want to kind of show some of these other areas of the market. I know we also want to talk about crypto, wherever you want to go next.
Crypto, come on, fat pitch, come on. What could go wrong in crypto?
Yeah, so there's a lot to say about crypto. So basically, I guess if we rewind the tape 3 weeks now, we've got all our fun, dozen or so Bitcoin ETFs that are finally approved. See if I can pull up some on the fly Bitcoin charts here. One of the things that I am so thankful for is that we now finally don't have to hear, is the ETF going to be a sell the news event, or it's going to be a sell the news event, or it's going to be a ripper to the upside, and all this back and forth. That was just such a waste of energy. And, as markets do, they tend to frustrate sort of both sides of the camp, right? I mean, the ETF basically came in here, was officially approved, I guess, January 10th. And, we were trading for the most part. I'm looking at Bitcoin specifically here. And so we're looking at 44K as an average kind of middle of the range price. And what did price do? Let me just show a weekly chart, because I think this is just even the more pretty picture. And you can basically see that Bitcoin, there you are. All right. So basically, we got this nice kind of failed attempt here. I don't know why. There it is. All right. Trading views hurting me today. We got basically these 2 nice wicks down here where we had this nice range kind of developing here in Bitcoin. We had all the ETF news break on this candle here. We tried to rip up to the upside. We failed. We rejected kind of magnificently. And then we came all the way back down. We finally breached below 40K. We failed there, hammered out, and now we're kind of getting a nice follow through right back up to the middle of the range. So 2 weeks later, we frustrated both sides basically of people looking for that surge in price, people looking for the drop in price, and we're back to just this 44K magnet. And when I look at kind of the action here, there's a lot of things that kind of happened here with Bitcoin. First off, you have to remember that there's a lot of ETFs being approved, and a lot of those funds had to basically pre-seed their Bitcoin. They had to seed it with some Bitcoin, right? Which helped fuel a lot of the run up here that was happening, especially as we got into the fourth quarter, as the decision was getting closer. They were starting to seed their funds with Bitcoin. We also saw obviously a lot of speculators coming in and just betting on prices continuing to rise here in the short term. And when we finally got the approval, I think we got, basically a non-reaction. And it's because on terms of the sell pressure, of course, was FTX, right? We all thought FTX was behind us. We all thought the bad actors and all the crashes that we saw in 2023, 2022 timeframe were gone. But we had lots of outflows of GBTC that was soaking up a lot of the inflows for the new ETF. Perfect timing. And we had, I think, over $2 billion of outflows from FTX bankruptcy selling happening. So when I look at Bitcoin here, right, all is to say, I go back to some fundamentals, right? And I look at things like just the general hash rate of the network. Okay. One just proxy here of, are miners supporting the network? Are we continuing to see, security come in here? The answer seems to be yes, as we continue to trend up nice here. I look at things like, exchange reserves, how much crypto is sitting on exchanges. And that purple line here continues to really head downward, which tells me that folks are taking crypto off of the exchanges. Maybe they're locking it up, they're securing it. They're, being a little more sticky of types of holders and lots of other things, right? There's so much to go right down the rabbit hole here of looking at some of these network statistics when we get into crypto. And I don't want to take over the whole show looking at things like this, but when I look at the underlying backdrop, basically all is to say, like, look, things are healthy underneath the hood, right? There's lots of things still happening in crypto land, development, transactions, value locked, right? All this kind of stuff. And now you have these new sort of entrants, Wall Street, as it were, that can now profit off of this vehicle called crypto and Bitcoin. And I think that's again, longer term catalyst here. So for me, crypto, Bitcoin specifically, I am looking at it as just one of my favorite positions over the next 12 months, let's call it, to be. You got to manage risk, right? You got to know position sizes, right? There's not going to be ebbs and flows here, but I still really like this space. And the one thing I will also bring up here, when I look at where Bitcoin falls now and just the top assets, right? Flat out assets, it's a top 10 now. I mean, it's an $854 billion market cap, right? If you're diluting and all that stuff. And we know Wall Street loves to compare performance and chase the shiny thing that's going up. So there's a lot of work to be done, right? It's not without risk, but I still like the space a lot. And we'll see. Technicals right now just show it in pretty choppy territory, but looks pretty good. So that was a long rant. What are your thoughts on Bitcoin? Are you interested? Are you participating?
Well, first off, you do kind of sound like a permabull. Like, just to be honest, like,
of course, I got
all sorts of exotic data and things no one's ever seen before, and you're like, look at this obvious bull market, and it's like, you son of a bitch, I'm in. Right.
God damn. All right.
I do have one good Bitcoin chart here. Let's see if I can on screen. I got this.
Yeah, we got it.
One I just wanted to pop up. See if we can. Oh, there we go. We good?
We are good. BTC USD.
All right. You can see now that top in Bitcoin, pretty big area. The 0.618 retrace. Basically, all it's saying is, if you wanted to make the case that the dominant downtrend remains, well, that's where you do it. That's where the sellers would step up. And they did. obviously it's come right back. I think you made a great point about the dynamic, where it would be, where you just, what's the bull case where the Bitcoin means the ETF means it's going to be like a tighter supply demand dynamic for
Yep.
Bitcoin, right?
Yep. Yep.
Yeah, that's totally in play. Like,
Yep.
we don't know when, but
Right.
it tends to happen in these kind of markets with the ETFs. So, that's just one thing I'd point out. But yeah, so far, I mean, it looks fine.
Yeah, that is a cool chart, though. I didn't look at the fib retrace, and we are kind of banging our head against that 61.8. So that's probably some reason why it's taking 6, 7, 8, 9, 10 weeks here, chopping around, throwing people off the scent. So that's a cool chart. What do you got here with coin?
Well, and then there's the whole one thing that really caught my attention lately is, okay, well, now that we have the Bitcoin ETF, who needs Coinbase? Yeah, who needs any asset that's going to go up many multiples over a 12-month period of time? Who needs things like that? So, like we mentioned before, you've got this pretty deep retrace. I think it was like 38% decline just year to date in the last month in Coinbase. Well, if you noticed, it was another one of those perfect ABC corrective kind of retrace waves when that hammer came in around 120 1 or 2 weeks ago. And you look on the chart and you can see that 115-ish area, pretty notable confluence there. It's the dominant trend. Still, for now, it remains higher. Everyone is using that bottom of the hammer level, about 118, as their reference point. And so we'll see how that plays out moving forward. But I don't think other cryptos are just going away here. I think we're still going to have that cycle, that kind of risk on, kind of increasing risk on, aggressive, cycle building here. So certainly in play.
Yeah, I think it's a good point. I like the I like the look here of I mean, it's hard not to like the look, right? You got this nice kind of, accumulation range bottom that formed, you broke out, you're retraced, you're kind of at this nice textbook spot. So it does make sense. And coin, I mean, I think their business model is mostly okay.
There's some risks.
Yeah, there's risk. I mean, look, I guess
people want to take them out back and shoot them.
Yeah, it's
risky. The other thing I would say was like maybe this could just be an indicator for those other cryptos. Like,
let's take it to some of the ideas that you're fishing now. I know you're kind of staring a lot at this inflation trade, like we said at the beginning, or I think I mentioned. I mean, oil's been starting to break out, starting to look a little bid right now.
Stepping higher, just trying to chop its way higher. Yeah.
So what does that mean to you? Where you looking? Where does that bring your attention?
Yeah. So, well, we were talking about counterintuitive market action earlier, counterintuitive moves. Like, okay, wait, are rates really going to go lower? So what does that mean? And then wait a minute, you're trying to tell me prices are going to go up a little bit with rates going lower? Is that possible? It is possible. Will it happen? We don't know. But we've got the Brent oil chart here. You can see this whole time it's just been holding the massive breakout everyone was getting all excited about in 2022. Breakouts are still holding, right? And then we move along to we've got the small cap energy. Look at that. It's still it's still just basing kind of nicely here, and who knows what's up with that Saudi Arabian news. Everyone knew it, everyone didn't know it, whatever. The small cap energy, US based, we got some refiners in there. We've got oil services. There's coal. China loves our coal. Let me tell you. You got a little bit of frac sand, the producers. You just got a little bit of everything in that. It looks fine. And then, of course, you got Warren Buffett buying 55 every week in Occidental. Like, I mean, there are lower risk entries in the whole space.
I don't spend enough time staring at this sector, and I think a lot of people are maybe biased or tunnel visioned on it. But you mentioned coal, and yeah, I continue to see coal stocks show up in screens. I mean, just look at this weekly chart. I mean, look at this thing, right? I mean, it's just a monster here. right, is a monster. And when you go underneath the hood, like you said, I mean, I guess this index isn't being driven by a whole lot, but I mean, you got monsters like, natural, NRP, NC hasn't been doing a whole lot, but I mean, these things have been driving higher over a longer period of time for the most part, and they continue to show up. AMR is pretty impressive as well. BTU is in there. So I would say most people are probably underweight. And naturally speaking, if you own the S&P 500, you're underweight it just by index allocation, right? So like you have to go out and get this concentrated exposure to a lot of these individual stocks, like you're pointing out here. And so
you have to get out of your, go out of your way for sure.
And yeah, it takes some work here. What else? What else you have on?
Wait, there's more. But wait, there's more. Yeah, industrial metals. Wow, kind of looks a lot like an oil chart, does it not?
Yeah.
Your aluminum, copper, lead, nickel, zinc, etc. Wow, it's not moving up. Maybe it just kind of slowly grinds up. But regardless, the big picture here is that massive breakout that everyone was getting all riled up about. It has held this whole time. Like we are years into this holding now. So you got to poke around, look for some lower risk ideas. And then the Dow mining index, okay, they've got gold miners in there. Nobody wants gold miners, but the breakout holds. The message is clear. Like maybe it will break down. Maybe rates go lower and this all just breaks down. Maybe. But for now, no moss. It's still kind of holding in there. And then let's see what else. What else we got here? Oh, you got steel. Steel, my God, we're building everything. Everybody's trying to build these days, right? Nice little breakout, backtest holding. I don't know. You saw Nucor, boy, post earnings. Nice little ripper there. That's printed new all-time highs today. That's a looker. Then you've got it's not just steel. You want cement? Oh, that's cool. You're going to get some nice, ESG cement. Well, good luck with that, but everybody still wants it because they need the cement for the data centers, what have you. And look at it go. Then we've got Vulcan Materials. Okay, they, again, another one of the infrastructure plays, asphalt, rebuilt the roads, whatever. Boom, all-time highs. Copper wire, aluminum wire, Encore wire. Boom, that's your moneymaker right there. Look at that nice little 1-year base, and then that follow-on breakout just this week. Good stuff, huh?
Beautiful. Yeah, those are beautiful charts. And so what's interesting is like, how do you square these two polar opposite industries? Let's say we've gone 35 minutes into this episode so far. We haven't mentioned one Magnificent Seven stock. We haven't talked about semiconductors or technology really, except at the very start when we were looking at the cues. But how do you're seeing actionable opportunity here, right? For the reasons you talked about. When you think about what's working right now, the semiconductors, the chip stocks, right? The Mag 7. Are those long in the tooth to you? And are those interesting enough to you right now? I mean, there's certainly an uptrends in working, or are you just kind of saying, hey, look, have some of those, but pay attention to this? Like, how do you frame that out?
Pretty much pay attention to this. It's not just 7 stocks, and just ignore anyone who ever says that. Like it's not 7, it's 7. I've been trying to make this a thing, the Magnificent 700. There are 700 magnificent stocks out there right now. Tough breath environment, sure. Are the FANG stocks going up the most? Sure. But lots of good stocks out there. Plenty of money made. And I did want to ask you a little bit about these semis, because for me, stocks, that's halfway to a major target to me. It's, like you said, awesome run, incredible run. Like, what was it? 45, 50% in 1 quarter?
Yeah.
Fantastic stuff. But then you get so far extended up here, it's like, how do you trail a stop? How do you like to trail a stop up here on something like a semis that's had such a big run?
Yeah, that one's interesting. So if I look at semis, for me, when I think about these moves that I want to have exposure to longer term, like if I say, okay, I think we are heading higher over the next 6 to 12 months, and whatever that means to you. But if I have some type of opinion that says to me, okay, I want to basically have exposure to semiconductors, I start thinking less about trailing a stop and more about just rebalancing, right? So I don't know. I guess I would say if I'm participating in, I'm a trader, so I like the efficient use of capital. But if I'm trading like SOXL or some type of leveraged instrument or an options position where it gets outsized or it gets bigger in size, if I put it on at 10%, it grows to 15% or 18% of the portfolio. Sometimes to me, it's just a matter of selling and rebalancing and trying to maintain a core position. Because I think when you start to get into these specific trails, you have to have a plan to get back on board, right? The worst thing that's going to happen here, and I spent a lot of time doing this, is having these wonderful ideas that you spend a lot of time doing research and carving through charts to get this great idea. And then you put a trailing stop on it. And then, you end up getting stopped out at one point, and then you never get back in, or it's just a tough spot to get back in. And then you just never really kind of establish that position. And now here you are 6 months later looking at the chart saying, damn, that was my best idea coming into the year, and I don't have any. What happened, right? Like I captured a little bit of it, but now I missed the whole run. So for me, it would just be like, look, if I want to have socks in right now, realizing as this thing gets extended like it did over the past few weeks, selling into strength, right? Reducing some of that size, raising cash, looking to kind of reestablish or buy back in and maybe rebalance on the buy side once it, dips, retest 550, whatever else. So that's kind of how I look at it.
That's basically what I do. I kind of try to operate in thirds, and you get a 50-day bounce, maybe you add it back, or you get down to the 200-day, add a little more. It's just wanted to get your feedback on that, because it's a real interesting thing right now at this moment in time, because the stocks, we've got a nice little confluence around 5,200 in stocks, so 5,300. So, but I do have one more chart I wanted to share if you want to pop my screen. Oh, there we go.
Let's do it.
Oh baby, semi producers versus the energy producers. Now
look at this thing. Who's looking at this?
Well, just crazy, just madmen. But below the 200-week moving average, never would have thought that in a million years. Never.
That's very interesting. It's a very interesting chart. I don't think I've ever done that type of ratio. And yeah, look at how we're emerging here back into this big inflection zone. Interesting.
That big fat resistance zone. Very interesting. Hey, it takes energy to make semis, right? So
it's funny because before we hit record here, we were just talking about some of the earnings after hours, and we're looking at Qs, and I was saying to you, like, well, I hope this, I'd love to see the Qs come back down to earth and sell off a few percent, right? That'd be great because I can buy more. And it's that rebalancing conversation of like, you don't have enough of it. You're selling into strength. Perhaps you've got a minimum position on, or you got some exposure. You want more exposure. That's it. And so like, for me, it's like, I'd love for semis to come in. I'd love for tech to come in. I'd love for Bitcoin to stay range bound. I'd love for these things to happen when you have good quality ideas. That's it.
And now Google's down 6%. AMD's down $15. Look at you. Look at
this. See, so I will probably be buying tomorrow because I tend to, which will be another episode, but I tend to be a kind of a buy the dipper, a counter trend trader. I do a lot less stuff on momentum nowadays, I feel like, and I do a lot more buy the pain trade. And so I love it. I'm here for it. So this has been great. What else we got? Anything else? We kind of hit on all the big topics. I think
we're good. I think we covered it.
Folks, thanks for tuning in, and hopefully this was helpful. If you made it this far, hopefully it was informative for you and helps shape some ideas or give you some things to think about. For those of you who want to find Aaron's work a little bit more, where should they go? Where should we send them, Aaron?
You can just Google rotation report at Substack. You can sign up for the premium feed, premium newsletter, but you won't want to.
Stay out. You don't want to be in there. That's for me. I will retain the alpha. So thank you for coming on the show. We'll put those links in the show notes so you can go Google or click on that link in the description below, and hope to see everybody in a future episode. Take care. See you later, Aaron.